A market update for June 2023. Here's a short clip with a closer look at the S&P 500 bull case and bear case summaries. So this is the S&P 500 since 2015. The blue line, the rising blue line, is the 200-week moving average. You can see we've only broken it once, which was the COVID breakdown in 2020. Otherwise, we've pretty much held the blue line. October of 2022, we hit the low at 3,500. We hit the line and bounced off it, and we've been above it since. We've got on the chart there May 24th. Today's May 30th, and we're at 4,200. So a bull case summary for the second half of 2023. We've had inflation drop from 9.1% June of 2022. It's now at 4.9% in April. So we've had 9 or 10 consecutive months of dropping inflation. The argument is that this was a supply shock mainly, and that we're going back to a much lower inflation rate. In this case, the Fed may have stopped hiking. We've had corporate earnings strong jobs market. Consumer spending has held up. Housing prices have held. The technical analysis has us 6 months since the S&P bottomed, and we still haven't had a recession yet. Even if there is a recession, the bulls would argue this will have the Fed step in with rate cuts, QE, money printing either directly or indirectly. The bears have been wrong since the end of 2022, and holding a large cash position has been costly since January. The S&P 500 is up around 8.5% since January, and Bitcoin is up a large 70%. So the bears have definitely been wrong. About 70% of analysts were bearish. They were short stocks, and they were calling for a recession. This has not happened for 6 months. Will the bull trend continue? The bear case for the second half of 2023. I'm going off some arguments from Gareth Soloway, an investor you can follow on Twitter at Gareth Soloway. He's saying that inflation will stay persistent, meaning above 3%, and that a U.S. recession is still coming. The Fed will not be cutting rates. Unemployment will then rise. Stocks will have a significant sell-off of 20 to 30%, and then crypto will sell off even more. He's calling for Bitcoin to 10K. He's been saying this for about a year, but it might get there. Who knows? The big argument from Soloway is that he says this time the Fed will not start printing to save the market. So even if we do get a recession, Powell is not going to bail out the markets and support asset prices. Other comments from Elon Musk warning about a recession vis-a-vis Tesla. A lot of analysts are saying more banks are likely in trouble, and we just haven't found out yet. Rate tightening will slow lending, and this will hit the economy in the second half of 2023. So they keep saying recession, recession, recession. It hasn't happened, but it could happen soon. Looking forward, the S&P 500 from June of 2023 onward, you can see we hit a peak of 4,800 in January of 2022. We then fell 28% over 10 months to a bottom of 3,500 in October of 2022. At that time, again, a lot of the market was saying we're going down further, but they've been wrong. A lot of bearish analysts were calling for 3,000 S&P. We've gone the other way up to 4,200 now, and you can see the green circles showing higher lows and higher highs, climbing a wall of worry up to 4,200. So will we get a recession in the second half of the year and go down to that purple box, or will we grind along and go higher? The key question to answer is, if we get a recession, what will the Fed do? Will they cut rates? If they do, we'll likely get a bounce and go into the higher green circle at the top of 4,800. If someone like Gareth Soloway is right and the Fed does not cut rates despite a recession, we're in for tougher times. But I think eventually money printing and the politicians coming in to save the economy, saving jobs and businesses and the tax base will win out, and we'll have the money printers start up again. It may be delayed. It may not come until 2024 or 2025. But given the debt burdens globally, both in the U.S. and internationally, we can't have high interest rates. It's just impossible for governments to balance their books in any meaningful way and pay off debtors. So some questions. Is now a good time to invest in June of 2023? Yes, I'd say there's more upside than downside. There is the caveat that a big recession could cause problems. So how do I hedge my portfolio if I'm wrong? We have gold, obviously cash holdings, TLT bonds fund, something like Bitcoin. All of these may provide a hedge with less downside. Will we get a recession and cheaper prices in 2023? Possibly, but my bet is it's only a small pullback. I think previous bears that have been left out of this bull run since last October are feeling left out, and a lot of them will likely buy the dip, and so we will not go lower than the 3,500. A reminder to investors to try to be contrarian and see it through that lens. So again, as mentioned, in January, 70% of traders were calling for a big recession and were short. So a lot of the market had already sold, and there simply wasn't many sellers left. So of course, with fewer sellers, the prices have rallied. Okay, so looking forward, if you're thinking of maybe riding the stock market higher now, wait until sentiment becomes much more bullish, and that's the time to take profits and maybe trim your gains a little bit at that time. Thanks for listening. I'm on Twitter at Gresham's Law 7, and of course here on YouTube. Thanks.